So welcome back. This is our lecture 2 of income from salaries. Okay. And this is for CMA Intermediate December 2022 attempt. Right. So let's go ahead from where we stopped. It completed all these parts. Okay. And we came into retirement benefits. ठीक है, तो ये अभी तक यहाँ तक हमने पूरा किए थे और रिटायरमेंट बेनिफिट्स में ग्रेचुइटी हमने कर लिए थे. ओके, तो यहाँ से ग्रेचुइटी के बाद आगे हम बढ़ेंगे. ये प्रॉब्लम्स हमने देखे ये दो. Okay, so these two problems we saw last. Now we are going to continue with pension. Okay.
Yes, sir.
So first thing is हमको सबको मालूम है, we all know what is pension, correct? So pension is what after retirement, one you get it after retirement, and it is a periodical payment, that is every month you get a pension. ठीक है, हर महीने हमको पेंशन मिलता है रिटायरमेंट के बाद. ओके, और अगर मान लीजिए हस्बैंड का डेथ हो गया है, हस्बैंड या वाइफ जो भी अर्न कर रहे हैं, उनका डेथ हो गया है. ओके, देन जब वाइफ जो भी स्पाउस है उनको मिलता है पेंशन. इसको हम कहते हैं फैमिली पेंशन. ओके, दिस कॉल्ड एज फैमिली पेंशन, एंड दिस इज टैक्सेबल एज इनकम फ्रॉम अदर सोर्सेस. ओके, so it's taxable as IOS or income from other sources, right? And your normal pension, it is taxable as salary. Right, so let's see. Right, so it's periodical payment received after retirement. Okay, sometimes employer allows withdrawal of lump sum amount as present value of periodical pension. Okay, तो इसको जो लमसम अमाउंट है दैट इज कॉल्ड एज कम्यूटेड पेंशन और कम्यूटेशन, and what you are getting every month, that is uncommuted pension. Okay, so ये मैं explain करता हूँ. And then commutation is determined considering factors like age and health of the recipient, rate of interest, etc. Okay, तो चलिए commutation क्या होता है ये देखेंगे. Okay, so let's see what is commutation. So ये कुछ ऐसा होता है, मेनली मान लीजिए कि आप रिटायर हो रहे हैं अभी. ओके, यू आर से रिटायरिंग ऑन 1st April 2021. Okay, this is your retirement date. Okay, now here what the government does, say you are getting a pension of 10,000 per month. 10,000 per month is your pension. Now here, for the benefit of the employees, there is a scheme called commutation. ओके, कम्यूट का जनरल इंग्लिश मीनिंग है काटना कुछ चीज. ओके, कम्यूटिंग समथिंग मीन्स काटना. ठीक है, और एक भी मीनिंग होता है उसका कि आप कहीं जाते आते हैं तो उसको भी हम कम्यूटिंग बोलते हैं. ठीक है, और यहाँ पे और एक मीनिंग होता है कम्यूट का जिसको बोलते हैं यू आर कटिंग समथिंग. ओके, यहाँ आपका पेंशन काट रहे हो आप, इसीलिए कम्यूटेशन कहा जाता है. ओके, यू आर कटिंग योर पेंशन बेसिकली, हेंस इट्स रेफर्ड टू एज कम्यूटेशन. So what is done here is, okay, for commuting, the government, it sees the health records of the employee. Okay, it sees how healthy he is and all that. Okay, and so they would know, say, his life expectancy on an average is 20 years more, let us say. Okay, so normally you retire around 60 years. So so 20 years more is his life expectancy. Now it will be different for different employees. Okay, there's some other employee who has lots of health conditions and all that, and he might probably not get commutation of more than 8 years, let us say. Correct. So it depends on this assessment by government, okay, of your health. So based on that, your expected life is calculated. First thing, okay. Now it is 20 years, so let us say in this case. Okay. So what is done is, say, they are saying here commutation of say 60%. 60% commutation. Okay, the employee wants 60% of commutation here. Okay, so 60% means what will happen is this 10,000 will be divided into two parts. One is commuted 60% and uncommuted 40%. Okay, this uncommuted is what you will be getting every month. Uncommuted 40%. ठीक है, 40% कितना हुआ 10,000 का 4,000, करेक्ट. ये हुआ 4,000, ये हो गया आपका 6,000. ठीक है, अब आपको ये कम्यूटेशन के बाद यहां से अप्रैल ऑनवर्ड्स आपको मंथली पेंशन मिलेगा 4,000. ठीक है, दिस इज क्लियर. ये पार्ट है आपका. दिस विल बी योर मंथली पेंशन. ओके, सो नाउ इन कम्यूटेशन का क्या होगा ये देखेंगे. सो हियर what they are saying is they are cutting 6,000 every year. So ये है month per month we are talking about. This is per month, correct. ये per month है. So annual कितना हुआ? How much will be annual into 12? Okay, 12 6 are 72. So this is 72,000 annual. Okay, 12 4 are 48. So this we are not calculating this. Okay, this will get every month 4,000 4,000. You don't need to calculate it. Okay, इसको छोड़ देते हैं. अनकम्यूटेड समझ गया ना आप लोगों को क्या है. तो अब इसको मैंने काट दिया. ठीक है, ये जो 4,000 उसको एवरी मंथ मिलते रहेगा. He'll get 4,000 every month. Okay, so now this is annual, and what is his life expectancy? हमने यहाँ पे देखा था. It is 20 years, correct. So calculate it for 20 years. Next 20 years, how much he would have got had he been alive for 20 years. ठीक है, कितना मिला रहता है इज इक्वल, यानी ये होगा ये इंटू 20 करूंगा मैं, करेक्ट. एनुअल इंटू 20, तो ये आता है 14,40,000. ठीक है, दिस इज 14,40,000. राइट. तो ये जो 14, तो गवर्नमेंट ये बोल रहा है कि what the government is saying is that if we pay him this 60% of 10,000, 60% of 10,000, okay, continuously for 20 years, then we will have to pay him 14,40,000. Okay, right. So let's pay it now itself. Okay, so what they will do is they will pay this amount to you now itself. Okay, so little bit adjustment they will do for present value. Present value मतलब जो 20 साल बाद जो पैसे का वैल्यू रहेगा. ओके, वो जैसे फॉर एग्जांपल मान लीजिए अब ये 14,40,000, इसका जो वैल्यू आज है, इसका परचेसिंग पावर आफ्टर 20 years विल नॉट बी सेम, राइट. सेम अमाउंट का वो कम हो जाएगा, करेक्ट. सो इट विल बी एडजस्टेड फॉर दैट. ओके, सो दे विल पे हिम द सेम अमाउंट. ओके, so this 14,40,000 will only be adjusted for the present value, such that when you reach this 20 years, okay, his purchasing power should be same as 14,40,000 now. Okay, तो बस उतना एडजस्टमेंट करेंगे प्रेजेंट वैल्यू के हिसाब से. क्या तभी का रुपी वैल्यू क्या होगा वो सब देखते हुए. ओके, बस उतना ही समझ लीजिए. तो ये अगर ये बोल रहे हैं कि अगर आज दे रहे हैं उनको, अब ये आ रहा है 14,40,000 मान लीजिए. So also when they calculate this 20 years, they will also take into consideration, there'll be some increments, there can be some pay commissions, all that. All those things will be considered and they will arrive at this, okay? Right? So now this value, they will find out what would be the value of this today and they will pay that as commutation. Clear है? ये है commutation का concept. Okay, I hope it is clear. And this is your concept of commuting pension. Okay. So again, so कुछ exemptions में हमको जो है ना, this is your commuted value of pension. Okay, 14,40,000 is commuted value of pension, right? Had I added this 40% more here, which I am getting as monthly pension, okay, this 40% I'm getting as monthly pension now. Had I added this, I would have got the total pension for 20 years, correct? Right? For some calculation, you will get this commuted value of pension and you will require your total pension, okay, because the exemption is calculated on total pension, not on this 14,40,000. So how this is calculated is, you just simple equation is there. You take this total pension, okay, whatever is the total pension, okay, total pension multiplied by commutation. So here I'm just writing 60%, so it will make more sense to you, okay. Total pension ka 60%, this percent will be given in the problem, whatever is the commutation percentage, okay. It can be 40, it can be 80, is equals to, as per this equation, as per the example, 14,40,000, correct? Agree? यही मतलब है इसका, correct? हम बोल रहे हैं टोटल पेंशन जो भी अमाउंट आएगा यहाँ, okay, after adding your uncommuted and commuted pension, that total amount pension 60% should be this amount, this commutation, right? So total pension क्या होगा? Your total pension will be equal to is 60% को take it that side, so it will become 14,40,000 upon 60%, just divide by 60%, okay. Up in your calculator you can just do this commuted pension value upon 60%, you will get the answer. Or in other case, if you can also do multiplied by 100 upon 60, okay. अब सीधा आपके कैलकुलेटर में अपॉन 60% करेंगे तो आपको फुल पेंशन का वैल्यू आ जाएगा. यानी इससे हमको क्या पता चला? इससे what did we understand from this is, take your commuted pension value, divide by commutation percentage, you will get total pension or full pension. Okay, ठीक है, clear है यहाँ तक, right? So this is the explanation of your pension. Now uncommuted pension is taxable in all cases. Now we are coming to taxability. Okay, now we are talking about taxability. You can say uncommuted pension. Okay, in our example, 4,000 uncommuted is taxable for all, government, non-government, everyone. Okay, without exception, it is taxable, uncommuted pension.
Sir, I have to ask one question.
Yes, Nandini.
Sir, I'm not Nandini, I'm Priyanka.
I'm not able to hear you. If you can just type in the comment box.
Sir, I have to ask one question.
No, I am really not able to hear you. Type it. You didn't understand that part, or? Okay. So all these exemption series are section 10s, okay? It will be in section 10 series of section 10. Gratuity was 1010, okay? Pension is now 1010A, okay? Next we will do 1010B, 10C, like that, okay? These are all 10 series which are going. Okay. No, it's not 17. 17 is not correct. Okay, pension is section 10. Okay, this section 10 into 10 capital A. This is exemption. We are talking about exemption of pension. Okay, that is 1010A. Okay, so this particular section you are talking about is exemption which you get in commuted pension. Okay, that's what we're talking about. Okay.
Okay, sir.
Right. Because your uncommuted pension, no, this part, this will be taxable as salary. Okay, it will be taxable as salary. So which is why your salary section will apply to it. Okay. So don't worry about sections that much, I would say. Okay. Okay, don't go very deep into noting down section of each thing as such, right? So here you will have whenever there is a any exemption is declared of a particular thing, so there will be a particular section for that exemption. Okay, the way it is declared. So here for commutation, your section is 10. Okay, subsection 10A, right? So all exemptions will be under this. So now, if you put for uncommuted pension, it is separately. If you talk about section 17, you might get confused. Okay, so that's why you ignore that for uncommuted pension. But uncommuted pension is taxable as salaries. Okay, and another thing is, if you are getting family pension, uncommuted pension you're getting is family pension, then it will be IOS. Right. So this much you remember, it's enough. It's taxable as salaries as IOS. Okay. In this, just in pension, just remember the exemption section. Okay. So uncommuted is taxable for everyone. Then for commuted pension, okay, government employees is exempt, right? And government employees is, it includes employees of central government, state government, CGSG, central and state government, local authority, statutory corporation. We saw what is a statutory corporation, like LIC is a statutory corporation. Okay, these are bodies formed under their own acts. Okay, so right, and so basically for government employees it is exempt. Now see, at this stage I'll tell you one short thing. Okay, here and Supreme Court, High Court judge. See, this you need not remember separately, because if for anything, if CG employees are getting an exemption, judges automatically get an exemption. Judges exemption is higher than the CG employees. Okay, so this you need not even mention separately anywhere. If separately something is asked about SC or Supreme Court, High Court judge, and you do not know, but you know about CG, just write the same thing. Okay, if there is an exemption applicable to CG, judges will get it. Okay, it will always go hand in hand with your CG employees. So just to remember, I'll tell you one thing here. Okay, see, in retirement benefits, what all we have studied is, okay, so tell me what is the, so we have got, say, pension. Let's say first you studied gratuity, right? Pension. Okay, and your leave encashment. Okay, these are the main retirement benefits that you will study. Okay, so now of these, which is the best retirement benefit? Just think of it like that. Which is the best? Pension is the best, correct? So in pension, you're getting commutation also, and you're getting pension till the end of your life. Nothing like pension, isn't it? So top is pension. So let's put pension on the top. Best is pension, correct? Agreed. Next is gratuity. You're getting a lump sum amount. Leave encashment, you won't get too much amount normally. If employees go for leave encashment, at the most hardly they'll get 30,000, 40,000 like that leave encashment. It's only whatever leave is to your credit, that much you will get, correct? And you normally get it on the basis of basic salary. You do not get too much of amount in this, okay? Right? So why I am telling you this order to remember is your, okay, definition of government employees. Okay, so here for pension, pension is the best. Number one we gave you, that will be CG, SG, local authority, statutory corporation. Okay. Okay, so everyone, all four will form part of government employees. Gratuity is second, right? Second after pension. Just cut the rightmost thing, which is statutory corporation. Remember the order: CGSG, local authority, statutory corporation. Just cut statutory corporation. So now definition of government employees is local authority for gratuity. Okay. Now again, this is again one step lower. Cut the rightmost one again. Their definition is CGSG. So with leave encashment, you can also remember entertainment allowance. For entertainment allowance, also your definition of government is CGSG only. Okay, this is how you have to remember it. Okay, right? So now, so for government employees, it is exempt, right? So now here, what you have to see for non-government employees. What is government employees here? For pension, as we said, everything you have to consider. Okay. PGSG, local authority, statutory corporation. Okay, all you have to consider. Now, so it's exempt for government employees. So for non-government employees, okay, you will have to divide it into two parts. One is who have received gratuity. Received gratuity means even 1 rupee you have received as gratuity, then you will come under received gratuity. Second is you have not received gratuity. See, we are not worried about whether you are a part of Payment of Gratuity Act or not. You are not part of Payment of Gratuity Act, or you are government employee for gratuity. Okay. Anyway, I mean this comes under your non-government here. Okay. So only thing what you have to see is whether he has received or not received it. Don't worry about the act or anything to confuse you. Sometimes it will be given that, but he was not covered under Payment of Gratuity Act. So you have nothing to do for pension, whether he was covered or not under Payment of Gratuity Act. You only have to see whether he has received or not. If he has received even 1 rupee, put him here. Not received, put him here. Okay. So here, so if you have received gratuity, it is 1/3 of whole pension. That's why I showed you the computation of whole pension there. Right? You have to take your commuted pension, which will be given in the problem, divide by the percentage of commutation, and you will get whole pension. That whole pension you will do divided by 3 into 1/3 of whole pension. Okay, so that will be your exemption for commuted pension. Okay, of those who have received gratuity. Who have not received gratuity, they are just giving a little higher exemption, half. Half is more than 1/3, correct? Correct, half is more than 1/3. So they're just giving higher exemption just because he has not even received gratuity. Okay, just to be compassionate to him. So if not received gratuity, it is half. ओके, ठीक है। तो यहाँ पे ये मैं रिपीट कर रहा हूँ, हमने ये देखा था, आपको ये तो समझ में आ गया होगा कि हमने होल पेंशन का मैंने आपको बताया था जो कंप्यूटेशन, वो इसीलिए बताया था, इसके लिए हमको चाहिए रहता है होल पेंशन। ओके, तो यहाँ पे सबसे पहले आपको ये देखना है अनकम्यूटेड पेंशन टैक्सेबल होगा इन ऑल केसेस, ठीक है। तो ये दिस इज इफ फॉर द एम्प्लॉय डायरेक्टली इट्स टैक्सेबल एज सैलरीज, एंड फॉर फैमिली पेंशन ओके इट इज टैक्सेबल एज इनकम फ्रॉम अदर सोर्सेस। ओके, ये दो चीजें इसमें, ठीक है। नाउ फॉर द कम्यूटेड पोर्शन ऑफ पेंशन, For government employees, it is exempt. So just now I showed you, अभी बताया था मैंने, CGSG, लोकल अथॉरिटी, स्टैट्यूटरी कॉर्पोरेशन, पेंशन के लिए चारों होते हैं, ठीक है, और ग्रेचुइटी के लिए आपको ये काट देना है, ठीक है, और लीव सैलरी जब आएगा आपको ये भी काट देना, मैं बताऊंगा आपको, तो सिर्फ ये बच जाएगा CGSG, ठीक है। इसको तो आप कंसिडर ही मत करो सुप्रीम कोर्ट जज हो, ठीक है। अगर जज का क्वेश्चन आया ना, अगर सीजी के लिए एप्लीकेबल है तो इनके लिए एप्लीकेबल रहेगा ही, ठीक है, तो इसको आप इग्नोर करके चलो, ठीक है। तो ये हो गया आपका एग्जाम, ठीक है। फिर अब आपको ये देखना है, कम्यूटेशन का आपको पता चल गया, ठीक है, गवर्नमेंट एम्प्लॉयज का एग्जेम्प्ट करना है करके, राइट। नाउ फॉर नॉन गवर्नमेंट एम्प्लॉयज हु हैव रिसीव्ड ग्रेचुइटी, जिनको ग्रेचुइटी मिला है, 1 रुपया भी मिला है, तो वो रिसीव्ड, नॉट रिसीव्ड ग्रेचुइटी, ओके, जिसको नहीं मिला है, ठीक है, ये दोनों में। बस यहाँ एग्जाम्पशन कैसे कैलकुलेट करते हैं, जस्ट टेक द होल पेंशन, जो मैंने बताया था आपको, टेक द कम्यूटेड वैल्यू डिवाइड बाय द परसेंटेज ऑफ कम्यूटेशन, ओके, you'll see in a problem. So you will get this whole pension. Once you get the whole pension, multiply by 1/3, 1/3 will be the exemption. And here for not received gratuity, exemption will be half of whole pension. ये थोड़ा ज्यादा दे रहे हैं, ओके, लिटिल मोर, बिकॉज ही हैज नॉट इवन रिसीव्ड ग्रेचुइटी, तो एग्जेम्पशन थोड़ा ज्यादा देते हैं, ओके, दैट्स ऑल। सो दिस इज द टेबल यू हैव टू रिमेंबर, and let's now go ahead. Okay, just some small points here which is good to remember. The pension received by widow or legal heir of deceased employee, okay, after death, whatever is received pension, it is taxable under income from other sources, okay. So here again you are talking about your uncommuted pension, okay. Wherever commuted pension is taxable और आपको exemption नहीं मिला किसी में भी, so यहाँ जो भी हमने पढ़ा है ना ये सब, all these whatever we have studied, say you have not got any exemption, then relief under 89 will be available, right? So relief जो है, reliefs, rebates, you've got a small chapter about computation of this, ठीक है, तो एक छोटा सा चैप्टर है वो देखेंगे हम कि कैसे रिलीफ कंप्यूट होता है. There you will also understand that, you know, it's, that's why the name is relief, ठीक है, it's not an exemption, it's relief, little bit it reduces, okay. So this computation is separately, we'll see, that is after all your heads of income are over, okay, and we have done your computation of income, all that is done. After that we'll go to relief computation, okay. So now pension received from UNO will be exempt. Anything which is received from UN is exempt, okay. So pension received, this is a special case, so that's why you have this, received by a widow of UN ex-official. So a UN official who died, his widow, okay, he's receiving from whatever this US Joint Staff Pension Fund, whatever, is receiving, the widow is receiving pension. So naturally it's going to be exempt, okay, because in the first instance, UNO pension itself is exempt. If it is received by the widow of UN employee, it is going to be exempt, okay. So ये कुछ points है, additional points which you can remember, okay. चलिए, तो अब हम एक प्रॉब्लम करते हैं, so you will feel comfortable of what you have learned, okay. Let's do one problem. Mr. Amit has retired on 31/3/2021 from 1/4/2021. This is the start of your previous year, correct? 1/4/2021 is the start of your previous year. So what is your previous year? It is 1/4/2021 to 31/3/2022. Okay, that's your previous year. So he was entitled to a pension. So after retirement, right? So now this date is of not no use to us. So from 1/4 is getting pension, right? So we'll calculate from 1/4. He's getting pension of 3,000 per month. Okay. So on 1/8 he got pension commuted. Okay. So up from 1/4, if you count, you've got how much? 4, 5, 6, 7. Correct. So for 4 months he took this pension. Okay. For 4 months he took the total pension. Then on the 5th month he decided to commute 80%. okay, and received 1,20,000. So this is the commuted pension he has received. Okay, so as I had taught you how to calculate full pension from this, how will you do it? So far, whatever we have seen, if you were to calculate full pension, how will you calculate using this data? Yes, आपको अगर
4 months full pension, 4, 5, 6, 7, 8. 5 months full pension, and from 8 months.
yeah, no,
Sorry, sir. For 4 months, he is getting full pension 3,000, and remaining months, he get 80, only 80% of the pension.
So
total pension is 1,50,000.
Very good. Okay. So here now two things. What I was asking here is, see your commutation is 1,20,000. Okay. I had told you that formula, right? Where you will have this total pension. Total pension.
1,20,000 divided by 80 into 100.
Correct. So total pension into commutation percentage will be equal to your commuted amount. Okay, commutation amount. Correct. This is the formula which you have to remember. Okay, total pension into 80% is commutation amount. So total pension will be equal to what? Equals to this commutation amount upon 80%, correct? So this commutation amount is given in the problem as 1,20,000. So now in your calculators, just do 1,20,000 upon 80%. And see what is the answer. Upon 80%, or you can, what you can also do is into 100 upon 80. But I think in calculators, you will have an option where you can directly do divided by 80%. So it will be easy. We'll get 1,50,000. Okay. Any doubt in this step? ठीक है, कोई डाउट है यहाँ तक? तो ये इस तरह से हमने कम्यूटेड अमाउंट हमने कैलकुलेट की. And yes, Nandini, what you were saying, no, about those 4 months, okay, that is correct from the point of view of uncommuted pension. Okay, for the first 4 months, he will have this 3,000 into 4, 12,000 will be the amount of uncommuted pension. Okay. Now, but the other thing is he got 80% commuted. Okay. So remaining, you have to see, remaining is 20%. So what you will get, he'll get as uncommuted pension is 20% of this 3,000, which is 600. Okay.
Okay, sir.
So, right. So what is being asked now? Let us see. Compute taxable pension for if he is a government employee, non-government, not receiving gratuity. Okay. Third is also, excuse me. So third is non-government receiving gratuity. This is not receiving gratuity. Here they are saying, but not covered under payment of gratuity. We don't have to see this. Whether it's covered or not, we don't have to worry in pension because we are not in gratuity. We are in pension. Okay. Here, the only thing you have to see is he has received or not received. Okay. So he has received. So this is sufficient for us. Okay. So let's now go ahead and do the computation. Okay, so now see, this is how you have to create the table. First thing is, now this is your government employee, case A. Okay, and this is private receiving gratuity, and this is no, sorry, this is does not receive gratuity, and this is receives gratuity. Okay. B is does not receive gratuity. Right? That's how it has been given in the problem. Okay. So let's see now. First thing is compute the uncommuted pension. For 4 months, right? As we all agreed, 3000 into 4, it is taxable in all cases. For everyone, it is taxable. Okay, no need to worry about this. So just put the value straight away, right? And now you will talk about the uncommuted part of pension after commutation, which we agreed it was 600, correct? 20% of 3000. 20% of 3000 is 600. 4 months, this was 4 months. So take the other 8 months here. 600 into 8. Okay, this will also be taxable for everyone because it's uncommuted pension. So all three, it is taxable. Got it? So now what you can do is just add these two and bring the amount out here. So it will be same for everyone. Okay? Fine. So anywhere, any doubt, you can always stop me. Okay. Here we have talked about uncommuted. We have computed the uncommuted pension. Okay. You have it. This is 16,800 in all cases. Okay. Done. Now we'll go to commutation. Okay. Commuted pension. So in commuted pension, first write down the amount of commuted pension, what commutation he has done. So in all cases, it will be the same. He has commuted 1,20,000. Out of this, whatever exemption you get, that you will deduct and you will get taxable value of commuted pension. Okay. So this is his commuted value. And then for the first one, government is fully exempted, correct? Okay. So this is fully exempted, right? So you will have nothing taxable. So this is nil, right? Now let us see the second one. So here you all had computed and told me that the full pension is 1,50,000, correct? ठीक है, तो यहाँ पे आप लोगों ने बताया था कि फुल पेंशन इज 1,30,000. कैसे आया था? 1,20,000 डिवाइडेड बाय 80%. ओके, तो ये दोनों केस में हमको यही चाहिए, यही फिगर चाहिए. बस फर्क इतना है कि ये ही डज नॉट रिसीव ग्रेचुइटी वाले में हाफ आपको करना है, which is to half. So 1,50,000 upon 2, you will get 75,000 here. Okay, and in the other case, you will do 1/3 of 1,50,000, which will be 50,000. So this is for receives gratuity. Okay, last case is receives gratuity. Now what we will do is, this is your commuted value and this is your exemption we just calculated. Okay, here also this is your commuted value, this is the exemption we calculated. Bring the amount in the outer column, that minus that. Okay, 1,20,000 minus 75,000 here. Here 1,20,000 minus 50,000. Okay, that's all. So whatever we are showing in green now, that is the taxable value of commuted pension. Okay, so add it to your uncommuted pension, which was anyway taxable. Okay, this is anyway taxable. Add these two green columns, you will get this. Right? This is your taxable, total taxable pension for AY 2022-23. Understood? So okay, so this is where we'll end pension. So we'll do some more problems later on, right? So and then so next is now leave salary, right? If you have any doubts in the previous section and all, you can ask me later as well. Okay, just go through this. Right, 1 minute, I'm just putting my laptop on charge. Okay, so next is leave salary. Okay, so that's why I told you about leave salary. Now this again, if you see, this is 10 into bracket 10 AA, this section. Okay, right? So pension was commuted pension exemption, we saw 10A. This is 10 into bracket 10 AA. Fine. So this is leave salary. So I have already told you three things, correct? Pension, gratuity, leave salary, definition of government, right? So here it was, last one, it was what? Only CG and SG, correct? So government employees is CG and SG, it is exempt. Again here, leave salary received if you have encashed during service, fully taxable for government or others. Okay. So this treatment is same like commuted, uncommuted pension. First one. Okay. But if you are retiring and getting leave salary, for government employees, CG and SG exempt. For private employees, in definition of private employees now, who all will come? Local authority and statutory corporation, public sector, all that will come. Okay. So public sector is also taken as statutory corporation. Basically, it is your statutory corporation and government companies, okay, which are fully controlled by government. Right. So now, right. So how is the exemption calculated? Least is exempt. Least of the four is exempt here. Now here, the statutory amount is 3 lakhs. Okay. Maximum exemption is 3 lakhs. In gratuity, it was 20 lakhs, correct? Because in leave salary, you will not get too much, right? So the amount is also less. You cannot get more than 3 lakhs. First is cash equivalent of leave salary. Okay. So whatever, so basically your leave entitlement will be like that. It is based on your each completed year of service. For each year, you get certain leaves, correct? So, so here in this case, it is calculated as such for government rules, right? 30 days for each year of completed service. Okay. So in general, this 30 days is taken as 1 month. So basically, if the person has worked for 20 years, right? So you know that his leave entitlement is 20 months. Okay. So from 20 months leave, you just have to deduct whatever leave he has taken. So you will get what he has not taken. Okay. ठीक है? ये कैश इक्विवेलेंट ऑफ लीव सैलरी जो है, ये है आपका गवर्नमेंट का कंप्यूटेशन है, ठीक है? ये आपके एम्प्लॉयर का कंप्यूटेशन नहीं, ओके? So this is basically the government's computation. You have to see, take 30 days for each year of completed service. 30 days ko generally you take as 1 month. Okay, so what I'm saying is, if we are saying that you have worked for 24 years. So based on this rule, your leave entitlement will be how much? 24 months. Okay. For 1 year, 1 month you will get, right? And then out of this leaves taken. So every year you would be taking some leave. So let us say you have taken total of 20 months in your whole service. Now balance is 4 months. This balance is what you will encash. Okay. So that is this cash equivalent of leave salary. Okay. It is based on that 4 months. Okay. So the 4 months, like in the example which I took. Now B is, so least of the 4 will be exempt. Okay. All 4 you have to see, least will be exempt. Right. Second is 10 months average salary. 10 months average salary. Okay. So again, one difference in this average salary and the average salary of gratuity is, if you remember, that was, we took, if you retired in December, we took it till November, if you remember. Okay. So that average salary, if you want to see, I can show you again. See, I'll take you to gratuity. And here this average salary you have to take till the date of retirement. Okay, that is the difference. See, this is our gratuity. Okay, here. Okay, this is employees not covered under Payment of Gratuity Act. In gratuity, okay, basically, don't get confused. So this is gratuity. Okay, 10-10, right? Then this we had seen that for employees not covered under Payment of Gratuity Act, we use the term average salary, correct? Remember, we use this term average salary. So here, but gratuity, average salary was preceding month of retirement. So basically, we had seen in a problem also. I can just show you that problem as well. Yeah, this one, this old man problem. Okay, so basically, what I'm trying to say is, like, he has retired here on 10th September. Okay, in this case, it's 10th September. So you will take this till the last month end. So it will be what? August. So 31st of August. You will take 10 months ending on 31st August. Okay, for gratuity. And for now, coming back to leave salary, this average salary is up to the date of retirement. So say if your date of retirement is say 20th February, so you will take up to 20th of February. Okay, clear? And this C is leave encashment actually. So A is also leave encashment, okay? But you are using government rules for that. You are only limiting him to 30 days for each completed year of service. But the actual employer can be giving him 2 months or 2.5 months for each year, right? So it's on the employer how much he wants to give. So this encashment is which he has actually got based on his employer's rules. Okay. So difference between C and A will be difference between your C and A will only be that in C you will take the number of days leave entitlement as per employer's rule. So say this can be 45 days for every year. Okay. Only difference will be in the first point, you will just calculate as per 30 days. Use 30 days and calculate 1 month. Okay. That is the only difference. That's why A and C will be very similar in calculating. Okay. Right. And then last is your meaning of salary. ठीक है, ये 4 चीजों में से लीस्ट एग्जेम्प्ट होगा आपका. राइट. तो पहले वाला हमने देखा, ये आपका जो है गवर्नमेंट रूल के हिसाब से 30 डेज फॉर ईच ईयर ऑफ कंप्लीटेड सर्विस के हिसाब से हम लेंगे. इसमें से जो लीव ले लिया उसको काट के जो बचा है, ठीक है, उसको हम एवरेज सैलरी से मल्टीप्लाई करेंगे. ओके, विल मल्टीप्लाई बाय एवरेज सैलरी एंड यू विल गेट कैश इक्विवेलेंट. हियर दिस अमाउंट विल बी गिवन इन द प्रॉब्लम डायरेक्टली दैट ही हैज रिसीव्ड दिस मच. ओके, एंड दिस इज, ये है आपका मैक्सिमम अमाउंट. इससे ऊपर 3 लाख के ऊपर आपको एग्जेम्पशन नहीं मिलेगा. Meaning of salary is again same as HRA. This is the reason I told you I had used HRA salary, so that it will be easy for you to remember. Right? So HRA salary is what we had seen again in gratuity, correct? Basic plus DA. If DA forming part of salary for retirement benefits, and commission on a fixed percentage of turnover achieved by the employee. Okay, this is your HRA salary. So you will then gradually you will get used to this fully. Okay, HRA salary bole se immediately it will come to your mind that we are talking about this. Okay, so by the time we will actually learn HRA now, probably in the next class you will learn HRA. By that time you would have fully learned that this is the meaning of salary for HRA, because we have already used it in many places. You can ask me then, why are we calling it as HRA salary? Why not when we studied it, studied the first thing, Why not this? Okay, because the reason being that when I studied tax, when I first learned tax, like it was some 15 years, 20 years back, okay, about 20 years back easily. So there to us, like in our BCom, we had a little bit of income tax. They started with HRA. So it got so imprinted in my mind that, I remember it as HRA 70. Okay. So anyway, it doesn't make any difference. You can call it by any name, right? So you just need to know that.
Sir,
Yes.
sir, point A, once again,
Point
give
A,
me explanation.
I will take up a problem. With that, it will become even more clear, because if there are figures, it will be easier to understand. Okay.
Okay, sir.
Right. So here, this red asterisk, if you see, here it is here. The asterisk means that saying deduct leaves actually taken, okay, which I have told you already, right? Now, average salary is to be taken till the date of retirement. Average salary till the date of retirement, right? So here you can see, retires on 18, then you have to take 10 months average salary. So it has to end on 18/11. So if it has to end on 18, you have to start with 19, correct? Your month, if you have a month in the middle of the month, you have to calculate one full month in the middle of the month, okay? You will have to calculate it like that. It will always be like, if you start on 5th of this month, end on 4th of next month. You start on 10th of this month, end on 9th of next month. Okay, that will be 1 month, right? So if you want to end on 18th, then you will definitely have to start on 19th. So start on, so you need 10 months. For example, from ending on 18th January, 18th November, so we start with 19th January. Then on 18th February, it is 1 month. Okay. So February, March, April, May, June, July, August, September, October, November 18th. Okay, 10 months, right? This is how we have to compute it. Okay, so now then the relief is, you know about relief. I'm sure you are quite comfortable about relief now, correct? If there is no exemption, then you can get relief, right? So if you get any exemption, you cannot get relief. Both do not go hand in hand. Okay, they are exclusive. If you've taken any exemption, then no relief. Okay. So then, right. So next point is, just says that leave encashment from more than one employer. If you're working for more than one employer, still your total exemption will be 3 lakhs, correct? You work for one employer, you work for 10 employers. But if another person is getting exemption of 3 lakhs, you will also get the same, correct? Right? So that is one thing. And if, say, many times, right, people work in an employment for 5 years, they retire from there. So they get some retirement benefits and all that. Then later on, they join somewhere. In that case, if that person has got, sorry, in that case, if the person has got any leave encashment earlier, say he has got 50,000 earlier when he retired. In the current company, when he retires, this 3 lakhs will be taken as 2,50,000. Okay. What he got earlier exemption, that you have to reduce it. Right? Got the point, right? So basically, this 3 lakhs has to be common for any person. Okay. There's no, there will be no discrimination between any two people. Right? So everyone has the same. So if you've already got 50,000, then now you can only get 2,50,000 more. Correct? Right? So that's what it is, right? This is all simple, basically. Now let us do one problem here. Okay. Here, let's do this. Okay. So he's working in Zebra Limited, right? So private company. Okay. So since the last 25 years and 9 months. Okay. the total working period is given here. Okay. And there's one more thing I would like to tell you just before this. Yeah. So here you can see cash equivalent of leave salary, it says, right? Okay. So up to 30 years of completed service, it is saying. Is it saying or part thereof in excess of 6 months? It is saying 30 each year of completed service, correct? It's not using the word or part thereof in excess of 6 months here. So which means any months has to be ignored here. Okay, right? This is one point I wanted to tell. Okay.
Yes, sir. Only years or not in months.
Yeah, months you have to ignore altogether. Okay. In this. So let's see this problem. Okay, we'll just read it slowly first. After this, I'll give you a lunch break. Okay. Mr. Bhanu is working in Zebra Limited. So it's a private company. Okay. Here, if it is a statutory corporation, they will tell you that it's a statutory corporation. Here, for leave salary, even statutory corporation, you will be considered as private, correct? Only CG and SG have deduction. So it doesn't make a difference here, right? But this, it makes a difference in your pension. Okay. So if there's something which is a statutory corporation, in that case, they will tell you. Okay. Otherwise, you can always assume as a private company or a company as such. Okay. So now this is 25 years and 9 months. That's why. So basically, you can cut this off, correct? Will only take 25 years. Right? Now, company allows 2 months leave. So the company can allow anything. They can allow 2 months, 3 months for every completed year of service. It's their wish. Okay, it's their benefit they are giving to their employees. Okay, but government will decide how much exemption they have to give. Okay, so that's why government has limited it to 1 month. Okay, that was our first point. Right, the government's one. Right, so 2 months leave. During the job, he had availed 20 months leave. Okay, so you will also know that he has taken 20 months leave in all. Okay, and at the time of retirement on 10/8, so he has retired on 10/8/2021. Okay, he got 1,50,000 as leave encashment. So this is your leave encashment. In our solution, this will be the first figure. We'll start with this and then we'll compute the exemption and we'll deduct it from 1,50,000. Okay, right? So, and for average salary, you have to end here. You will use 10 months ending here. Average salary is very important in this because you will use average salary for 3 computations here. Once you compute average salary, that becomes your key figure. And other things you calculate using that only, average salary. Okay. So for leave encashment. So here, can you tell me how 10 months will start from where? Ending at 10/8/2021. Will start on 11th, correct? That we know.
Previous year, 2011. 11.
11? Which month, which year? When to when, I'm asking.
11/11/2020.
11/11/2020. So if I
Yes, sir.
if I start from 11th November, then in 10th December 1 month will be over, correct? 10th December. And then so 1 month. Then January, February, March, April, May, June, July, August. Only 9 months are over. Accountancy, yourself accountancy. You have to start from October basically. Because in
11,
November,
10,
1 month will
11, 10, yes, 11, 10, 2020.
yeah. Okay. So it is basically this will be 11/10/2021 to 10/8/2021. Okay, this will write it down. Okay, 11/10/2021 to 10/8/2022. Okay, these are our 10 months. Okay. Okay, fine. So, right, then on that date, basic salary. Okay, these are all. This is the details of salary which we need, correct? And we saw what was the meaning of salary, HRA salary, correct? Right. So HRA salary.
DA commission also included.
Yes. So you have to hear 5,000 per month is your basic, and this is your DA. Okay. You'll and so here actually in your HRA salary which we saw, uh, is it DA forming part of salary for retirement benefits or full DA is taken?
Full DA.
No, it's DA which is forming part of salary for retirement benefits. Okay, but when nothing is given, if you're given only DA, you have to assume that whole thing is forming part of salary for retirement benefits. That's why you'll take whole 2,000. Okay, but in that HRA salary, you have that is DA if. Remember, we put it as DA if. Okay, then I can show you. That's why you have to remember it like that in short always. Yes, we call it, see, if you see here, see, we call it as DA if. Okay, if means if forming part of salary for retirement benefits, that is the meaning. Basic plus DA plus commission on turnover. Okay, just going a little slowly so that you all won't have a problem in understanding. Chalo, okay, so here now, so basic DA, and then next what we're going to see is commission on turnover, 5% on turnover. Now this is a fixed per month commission. Will we take this? Is getting commission
5% on turnover only take.
correct. So don't take fixed percentage turnover, fixed turnover, not fixed percentage. Any fixed amount turnover is given, and don't take it. Okay. Only this percentage wise turnover, only that you will take. Okay. And only on turnover you have to take. Okay. If any percent on profit or something is taken, that you cannot take. Take percent on turnover only, always. Okay. So this basically what we are not going to take this, correct? Done. 5% of turnover. For this, the turnover is given for computation of 5% during last 12 months is 5 lakhs. Okay. So if you do 5 lakh into 5%, you will get commission for 12 months. Right. But we want commission for 10 months, correct? Because we want for salary, we want to compute salary of last 10 months, isn't it? So which is why we want for 10 months only. So what you will do, whatever you are getting by 5 lakh into 5%, multiply by 10/12. So 5 lakh into 5%, how much it is? Tell me. 25,000.
2,500 taken.
25,000, no? Or yeah, 25,000. 25,000. So this is 25,000 is what yours? It is your 12 months salary, correct?
12 months.
How much is 10 months? This is how we'll calculate.
2,500.
Okay, so what you will do, how to compute, I'm showing you here. This is called cross multiply. 10 into 25,000 upon this 12,000. Okay. In other words, it is 25,000 into 10 by 12. We have to do. Got it? So answer will be equals to 25,000 into 10 by 12. This it will be 20,833. Okay. Right. So then we'll move ahead. All this is done. Okay, then there's one more point here. Okay, which is Bhanu got an increment of rupees 1,000 per month from 1/1/2021 in basic and 5,000 in DA. This is the increment he got. So if we are going to compute average salary, if this increment is falling in between, then that also we will have to incorporate. Okay. So like we did in a previous problem, correct? Last problem we did something like that, if you remember. Okay, so now if you see, this is 1/1 and what is the retirement date? 10/8. Okay, so it is 1/1 is, and we have computed salary from when? From 11th of October, correct? 11th of October. So it goes behind this 1/1. So all salary which he got before 1/1, in that we have to reduce 1,000 from basic salary. This will be 4,000, and DA you have to reduce 500. It will be 1,500. Okay, only for salary before 2021. Okay, I'll show you. It will be clear. I'm just first explaining in words, and then we will see the problems. It will be doubly clear. Okay, so this is the problem we have read fully, and just one point they're asking in the end is part B. Okay, only one thing they have changed. They're saying that if he took 20 months leave, correct? They told us he took 20 months leave. If he takes 2 months instead of 20 months, okay, then what will be the answer? That's all. That's the only one thing they have changed and asked B point. Okay, so let's now see the solution, and in between I'll bring you back to the problem if required. Okay. Right, so this is 25 years we knew. Okay, and that year what we calculated, no, that's as per General Clauses Act, that 11th to 10th and all, that's how it has to be computed. That is said by General Clauses Act. Okay, like 7 September to 6 October will be a month, like that. Salary is basic, DA plus commission on turnover, right? So but this will be, you have to come in leave salary, you have to compute for last 10 months average, and this average salary only we will use for point number 1 and point number 4. Point number 1 and point number 3. Okay, same average salary you have to use to multiply. That's why I said that computation of average salary is important. Once you get this figure, it is problem is like solved. Okay, so now let's first see how to compute average salary. Okay, first of all, let's see what is the year we had decided. It is 11/10, correct? 11/10 means in October, how many days?
That 31 minus 10, 21 days.
Very good. So in October, it is 21 days, right? From here onwards, it will all be normal, 30, 30, 30. At the end, in August, you will take 10 days, okay? Clear? This is clear? In October, basically, I just wanted to show October. It will be 21 days. So calculate from 11 onwards. 11 to 31 is 21 days. Okay. So that's why this is 21 days. Okay. So now we are calculating your average salary. So October is 21 days. Fine. Then we have what? November, December. Okay. October, November, December, and then This is post increment. Year till year is post increment. For here, we are using data what is given in the problem. They've given basic salary of 5,000, correct? Take 5,000, DA of 2,000, 2,000. Now here, for 10 days, how many days are there in August? 31 days, correct?
31 days.
And you want only 10 days. So just multiply 5,000 by 10 by 31. Just do it in your calculators. 5,000 into 10 by 31. Okay. So you are getting the same figures, 1613. Just multiply 5,000 into 10 by 31. You'll get 1613. 2,000 into 10 by 31, you'll get 645. Okay. Right. Fine. So this is done. Till here, you have understood. Right. So let's go in these three now. If you are not understanding anything, just let me know. Okay. Any point, if you are not understanding, just let me know. I'll repeat it for you. Okay. So now, before this, now we knew that they told us that he got a increment of 1,000 in January in basic and 500 in DA. So that means after increment, it is 5,000 and 2,000. So this would have been 1,000 less before that. And this would have been 500 less. This is how we got 4,000 and 1,500 here. Same here. And here again do the same proportion which we did there. So here what you will do? Take 4,000 into, now here 21 days you have to take. How many days are there in October? 31. So just do 4,000 into 21 upon 31. 1,500 into 21 upon 31. You will get this. Okay, clear? Now you understood how we put this table together? Just add all the figures. That's all. Okay. Add this fully and you will get the total here. Okay, and add this fully and you will get the total here. Fine. So now you have got this, correct? This 2833. Okay. So basically, how we got it? We computed this before, right? So this is not the total of the above two. Sorry. Okay. So this is third thing is commission. This commission we computed before, correct? 5,000 into 5% into 10 by 12, right? And we got this 2833. Remember? So this is now these three. If you add up, you will get the total. Okay. Let me use yellow. Okay. So this is your total. This is total 10 months salary, average salary. Okay. So divide by 10 months and you will get average salary for 1 month. Just divide by 10. It will be 8681.7. So they have just rounded it off. 8682. Okay. So this is how we got average salary. So anyone has any doubt in computation of average salary? You can ask me now before I move ahead. Okay, so you have all understood, I'm assuming. Okay, let's go through once through the video. Any minor doubt is there, and it will get cleared. Okay, so now let us go ahead and do the exemption. So you are now armed with your average salary of 8682. So now let us find out the exemption. Okay, so what were the two things? Okay, here he is a so basically he is employee of private sector. Okay, non-government basically. He is not central government or state government. That is what we knew. two things what they have written is, second one I'll tell you later. Okay, first one let us see. Second one is this B point. Okay, nothing. We have to only change this 20 months. We have to change to 2 months. That's all. In this. So let's just do the first part. Okay, case A. So now that first point of computation, no, Kanagaraj, it will get clear to you here in this calculation. So this is your case A, which is what we are computing now, right? The case A is the real problem. Case 1, they have just changed leave taken to 2 months. That's all. So how we'll start? We'll start with leave encashment figure always. Okay. The main figure received, with that you will start. Then you will compute exemption here. So this is where we are computing the exemption. Okay, and write the exemption here. Then 1,50,000 minus exemption will be your taxable amount. Okay, this is how we are going to calculate it. Now actual amount received, meaning least of the following will be exempt. Okay, least of the following is exempt. So you don't need to remember the sections that way, and the subsections very much not. Just don't worry about this. If at all you want to use it, you can use the main sections, right? If at all you remember, don't really worry about the subsections at all. Okay, right? So let's see. Actual amount received is 1,50,000. Fine. First is actual amount received. Statutory amount we all know equal to 3 lakhs, correct? These two straight away you write it. Now, okay, third point is, okay, you will take 10 months average salary. 10 months average salary. So basically 10 months into 8682. This one, okay. This is average salary per month, right? 10 months into 8682, or you can even directly take the total figure. That's also okay. That's basically your total of 10 months, correct? Or just take your 8682 into 10 months, right? So this is your third point. Before I take you to the third point, I'll take you up so that I can show you this clear. Okay, so this becomes, sorry, ignore this. Okay, just ignore this. This I'll show you later on. So this part. So this part you have to see. This part just see. Okay. So this is 10 months average salary. So now I'll show you in the format what three things we have got here. Okay, then we will come back to this fourth here is the first there. Okay, point D here. You can write any of these. Okay, because you are not quoting subsections here, A, B, C, D. These are just your points. Okay, that it is okay if you can put the last one first and all that. That's not a problem. Okay, so here, this is the third point which we took is this 10 months average salary. Okay, then leave encashment actually received is the very first thing we put, correct there, and 3 lakhs we put. These three things we have put there already. Okay, now only one thing remaining is cash equivalent of leave salary up to 1 month for each year of completed service. Okay, how to put this we will see. So basically your completed service is how much? 25 years, correct? And how much leave you have taken? It's written here.
25 months.
Yeah, completed year of service is 25 months and leave taken is 20
months. Remaining is
given, correct? So
remaining is 5 months.
Remaining is 5 months. So here, as per first point, what you have to do, take this 5 months, multiply by average salary. That's all. Okay.
It is saying that company allows 2 months leave salary of every year.
Yeah. So whatever the company allows, okay. So whatever the company has allowed, based on that, they have computed and given you
But-
final amount. Okay. They have given
Okay,
you
sir. Okay,
the
sir.
actual amount. So once you have it, you don't have to worry about it. Okay.
Another thing is how much is allowed, not a factor. Act, what tell is act factor, na?
Yeah.
If suppose some companies 15 days working and 15 days leave, in that case, totally we calculate 6 months leave and 6 months working. That is not our problem. But the act tells each and every year 1 month or 30 days taken as leave
Yeah.
allowed.
Okay. So
Okay,
if I continue here, right? So the last month, so this 1 into just ignore this. Okay, it's not required. See, completed year of service minus leave taken. Just take completed year of service minus leave taken, right? And for this into salary per month is nothing but this average salary. Okay, just use this average salary again. That's why I said that we'll use it in many points. Your average salary. Okay, so this if this is given here, you can see 25 minus 20 is 1 into is not required. Okay, it's 25 minus 20 into 8682. Correct? This is what we saw. This will give you this much. Now in this point B, they said that in place of 20 days, if he has taken 2 months only leave, but then only thing difference will be just do 25 minus 2 instead of 25 minus 20. Just do 25 minus 2 into 8682. If you do this, you will get this value. That's all. So in the second point, all this is same, this is same, everything is same. Okay, these two are same, only these two figures are different. Okay, this and this, and what you have changed is only changed 20 to 2 years. That's all. Fine. And now in the end, yeah, now just do this minus this, you will get the answer in both. This is the taxable leave encashment. Okay. Right. So now I'll give you a break, and there's one more problem on your leave encashment, but I'll do it later. So let me just write pending here. Okay, we'll just go ahead for now. Okay, I'll just come back and do it. Maybe you just go through this problem, you'll feel little better with leave encashment. In your next session, I will do this one more problem for you. Okay, we'll just write it as pending here, so I'll remember. Okay, fine. Okay, this one problem of leave encashment I'll show you again. Just go through this. In the next session, whenever you come back on Friday, okay, that time I'll do this one more problem for you. So go through these problems, you will understand it better. Okay, and these three things, okay, these are exempt for all your retirement benefits. That is gratuity, leave salary, and pension. Okay, so one is payment to widow or legal heirs of employee who dies in active service. Okay, that is exempt. Okay, right? So leaves on all three it is. Leave salary is also exempt when paid to deceased employee. Deceased means dead, the person who has died. Okay, during service if he has died, then it is exempt in the hands of the legal heirs. Okay, same thing for commuted pension. So all three retire in one. That's why I put these three together, so you can there'll be no doubt on your part, right? So when paid to legal heirs, it is when the employee has passed away, then it is exempt. Okay, right? So next will be retrenchment compensation, but I'll give you a break now. Okay, just one more thing is like on a very minor change, so it doesn't no change in your time or anything. But Friday, Saturday, and Sunday, correct? We got on Sunday. I was actually basically planning for 7 to 10 p.m. evening. Okay, little longer one, so we can just stay ahead of the schedule. On Friday and Saturday, will start at 7 p.m. Okay, but I will end at say somewhere around 8:10, 8:15 like that. Okay, because I have another class from 8:30 on Friday and Saturday. So there's a new class which I've added for OMSM on Friday and Saturday. It is from 8:30 to 11 basically. So that's why I'll end this up at 8:10. Okay, 7 to 8:10 on Friday and Saturday. And on Sunday, we'll have a longer session. Okay. So this is for you. And now the time is 8:30. Okay. Come back at 8:45. Thank you. Okay, so welcome back. Next in retirement benefits is retrenchment compensation. Okay, this is called as retrenchment compensation. So basically, what is retrenchment? It is cancellation of contract of service by employer. Okay, so actually, what happens is if there is no work, the general terminology of retrenchment is if there is no work and you've got surplus staff, okay, then surplus staff and no work or not enough work, then you retrench them. Retrench means you are it is like a forced retirement. Okay, retrenchment means like a forced retirement. So cancellation of contract of service by the employer. Okay, that is given to a workman as per Industrial Disputes Act. So in Industrial Disputes Act, the term workman has been defined. Okay, so it is given to a workman. This compensation, okay, which is given to a workman, is exempt to the list of. Okay, it can be given to others also, but this exemption, what you are saying is this basically is for workman as per Industrial Disputes Act. Okay, the first thing is here again, here your total amount is basically 5 lakh, sorry, right? One is amount actually received. These two will always be there, right? The amount received, and this will be a statutory amount. This is 5 lakhs here, right? And this first amount is what you do not need to compute. Okay, it's an amount as per Industrial Disputes Act. So this will be given in the problem. Okay, so although the Industrial Disputes Act is not in your course even in law as such. Okay, so this computation as per this section of the Industrial Disputes Act, this is what you don't have to do. You'll be given this amount. Basically, it is equivalent to 15 days average pay for each year of completed service or part thereof in excess of 6 months. Okay, here also you see this part thereof in excess of 6 months. So excess of 6 months will be treated as 1 year. So basically, you don't have to compute point. Okay, you will be given this point. Right? Normally, see, you will not get any problem in retrenchment compensation. You can get some questions like they can test you on this 5 lakhs, whether you know or not. Okay. So here also it's good to know that it is 15 days average pay for each year of complete service or part thereof in excess of 6 months. Just remember whatever is given, only this is what is required. But basically, your study material still tells you that how much in deep you have to be in various topics. So if the institute wants you to have a deep knowledge, they give you more examples. Okay, things like this where you do not have example, it means that only the concept is important for you. Okay, and here one thing is compensation paid under any scheme approved by central government is exempt. If a retrenchment scheme is approved by central government, that is fully exempt. You did not apply this there. Okay, and another thing is like if the word retrenchment is not used, they are saying on closing down of undertaking, compensation received on closing down of undertaking, something like that. That will also mean retrenchment. Okay, not necessary that they use the word retrenchment. Okay, where if they are saying closing down of undertaking, or they're using the word say permanent layoff, anything like that, which means that the workforce has been contracted. That is the meaning which is coming now, that you will take it as retrenchment. Okay, ठीक है. तो ये होता है आपका नेक्स्ट है retrenchment compensation. इसमें इसका सिर्फ theoretical value है और इसमें आप देखेंगे least of the three is exempt. एक है इंडस्ट्रियल डिस्प्यूट एक्ट के अंदर एक अमाउंट कैलकुलेट होता है, ठीक है। तो कंप्यूटेशन आपको नहीं करना है, ठीक है। इंडस्ट्रियल डिस्प्यूट्स एक्ट अपने कोर्स में नहीं है, राइट। सो ये अमाउंट आपको दिया जाएगा, बस याद रखना है कि इक्विवेलेंट टू 15 days एवरेज पे फॉर ईच ईयर ऑफ कंप्लीटेड सर्विस और पार्ट इन एक्सेस ऑफ 6 months। ओके, ये याद रखना है बस। यानी कि कुछ आपको ऑब्जेक्टिव में आ सकता है कि ऐसा कुछ पूछ सकते हैं कि ये पार्ट देयर ऑफ इन एक्सेस ऑफ 6 months है कि नहीं, दैट कैन बी टेस्टेड। ओके, and this 5 lakhs, what is the maximum amount of exemption available, that can be tested, okay। And compensation approved by CG, if it is approved by CG, ये तीनों करने की जरूरत नहीं, you don't have to do these three। Approved by CG means fully exempt, okay। And compensation on closing down of undertaking, ऐसा भी दिया रहा तो you will take it as retrenchment। ऐसा नहीं है कि सिर्फ retrenchment वर्ड यूज होगा तभी आप लेंगे करके, ठीक है। परमानेंट ले ऑफ हुआ है मतलब वो रिट्रेंचमेंट है, ओके, राइट। सो देन नेक्स्ट इज योर लास्ट in terms of retirement benefits, okay, we are talking about voluntary retirement or termination, okay। This is voluntary retirement or termination। So you know, we know what is voluntary retirement, right? We know what is termination of services, okay। So here see, subject to conditions laid down under Rule 2BA, Section 1010C grants exemption. Okay, so we'll see the conditions which are laid down for this. Conditions is two main conditions are there. Okay, compensation is received from a specified employer. So what is the list of specified employers, that we will see. Okay, we'll learn it in a very easy way. Okay, तो काफी इजी इसमें हम लर्न करेंगे। एक लिस्ट ऑफ स्पेसिफाइड एम्प्लॉयर्स होता है, ओके। तो उस वो एम्प्लॉयर्स ने अगर आपको वॉलंटरली रिटायर किए या टर्मिनेट किए हैं तभी आपको मिलेगा, नहीं तो नहीं मिलेगा, ओके। सो इफ ओनली दीज एम्प्लॉयर्स, इफ दे terminate you, okay, or you are take voluntary retirement from them, only then this section applies, okay, otherwise it doesn't apply, right? So conditions for exemptions, one is received from specified employer, received as per voluntary retirement scheme framed in accordance with prescribed guidelines, ठीक है। ये दोनों है condition of exemption। So these two things we have to see, what is specified employer and what are the prescribed guidelines, okay। These two you have to see, so हमारा will complete the conditions of exemption। First of all, what is the amount of exemption? Here also it is 5 lakh. In retrenchment compensation as well as voluntary retirement termination, this is 5 lakhs. Fine, maximum amount. And so it's minimum of lower of actual amount received and 5 lakhs. That's all. This is simple. Right. So let's see these guidelines. Let's see these guidelines. Okay, prescribed guidelines. One is employee has completed 10 years of service or 40 years of age. Okay, either you should have completed 10 years of service or 40 years of age. It doesn't apply to a public sector company. Okay, this age limit will not apply to public sector company. For others it will apply. Then it doesn't apply to directors. The scheme doesn't apply to directors. Okay, if you are a director employee, you will not get exemption under this scheme, okay। It should result in overall reduction in existing strength। इसका मतलब ये है कि it means that if you have 500 employees now, by this retrenchment there should be overall reduction, so it should become say 3000 employees or whatever, but there must be an overall and permanent reduction, okay। Overall strength, the vacancy should not be filled up, so they are talking about an overall reduction in workforce, okay, permanent reduction, ठीक है। Retiring employees not to be employed in concern belonging to the same management. आपने आपके 4 कंसर्न है, यहाँ से रिटायर किया आपने दूसरे इसमें ले लिए, तो वो रिटायरमेंट नहीं हुआ ना, then that's not retirement. You have taken an employee, say you have terminated an employee from here and absorbed him in another of your concern, then it is not termination, correct? So which is why it is not to be employed, and overall reduction should be there, and vacancy should not be filled up. Okay, all these are the conditions. If you fulfill all these conditions, then you will get this exemption. Three months salary for each completed year of service. Again, note down there's no part thereof in excess of 6 months. Okay, but to be careful with whatever is written in law. Okay, what is not written is not written. We cannot assume it. राइट, ठीक है, तो क्या लिखा है यहाँ पे देखिए, पार्ट देयर ऑफ नहीं है. 3 months सैलरी फॉर ईच कंप्लीटेड ईयर ऑफ सर्विस और सैलरी एट द टाइम ऑफ रिटायरमेंट इनटू बैलेंस मंथ्स ऑफ सर्विस. इसको ऐसे देखेंगे हम, we'll see it like this. Okay, so this is how much you have already worked. Okay, and here you are taking voluntary retirement or you are being terminated, but this much employment is still remaining. Okay, at the time when you are terminated here, your this much employment is still remaining. Okay, year to year is still remaining. Okay, so now this is what you will call as balanced month of service. Total of this is your balance month of service left. Okay, so here, so how you will compute is, you take this pink part, okay, multiply by 3 months average salary. Okay, let's just come back to here. So 3 months salary, okay, for each completed year of service. Okay, 3 months salary for each completed year of service. One that is for this part. I'll just put it here. Okay, see this is one. This is what you have completed, correct? And red is what I'm saying, which you are yet to complete, right? But you are taking voluntary retirement here. Okay, so the first point says, okay, 3 months salary. Again, salary will be salary last drawn here also. Okay, so basically this will be, this green part will be 3 months salary, okay, for each completed year of service, right? So if, for example, this pink part is 5 years, just multiply 5 into 3 months. Okay, 5 into 3 months salary, you will get it. So here you will take 3 months salary, and here, but for this part, the red part, you will compute separately. You take again salary at the time of retirement. Both cases you will take that, and just take this month as it is, balance months of services left. Okay, so whichever is lower of the two, that you will get. It is least of. Okay, again, you will not have any problem in this as such. These conditions and guidelines are important in this. Okay, even in your study material, there is no problem for this part. Okay, so conceptually it is like this. So basically 3 months of salary for each completed year of service, the pink part. Okay, this is this. So here you will get 3 months salary for each year, and for the balance part, this one, you will take only 1 month salary. Okay, and multiply it by balance months of retirement. That's all, and take which is the least of the two. Which is the least of the two, that is what you will take as per 0.6. Okay, so these are the guidelines. You just need to know the guidelines. Don't learn it. I'm telling you time and again. Just remember it as short points, very, very short points, words like that. Okay, so these are the guidelines. Two things I said we needed to know here. One is the guidelines here, prescribed guidelines. One is who is specified employer. Okay, so specified employer, I'll tell you very easily, you can learn it. This is the list of specified employers. Okay, start with the company, right? among our persons start with a company. This is nothing but a statutory corporation. Okay, that is again company. Just remember as any company here. Okay, and then here after company you have got local authority, cooperative society, okay, right, university, and here IIT. Okay, so IIT, or see, when you have a local authority here, if local authority is there, then central government, state government will be there naturally, correct? So specified employee, you can just put it like this: local authority, CG, SG, all come together, company and statutory corporation, both are companies only. These three you know already. Okay, now just apart from this, go for cooperative society. You have to remember, right? And education, certain educational institutions like university, IIT, and these are all IIMs. Okay, just remember as IIM, that is sufficient. No need to learn the city names and all that. So IIT, IIM, university, IIT, IIM. Okay, and this is Indian Institute of Foreign Trade. Okay, and or you can be given a generic name called notified institution. That is fine. These are your specified employers. Okay. So one important point that comes out of this is these are your specified employers, right? And if you are employed not by a specified employer, like someone else, you are employed by someone else, not specified employer, then you will not get this exemption, correct? Straight away. So it is only for specified employer. And if you follow the prescribed guidelines, right? So now someone else means if you notice here, you know all the persons, correct? Here you can see we do not have individual, HUF, okay? Many persons are missing. So that means this tells you that, say, individual, HUF, AOP, BY, okay? If you are employed by these, your employer is individual, HUF, firm, AOP, then it is fully taxable. Okay, that's what follows. And this is, you'll get once in lifetime, okay? Only once you will get this deduction, no second time, right? And if relief is allowed, then no exemption. Okay, if you have taken exemption, then no relief. Meaning of salary same as HR. Okay. Now, if in this problem, what is mentioned is the H is working in a public sector company, all that. Okay, opted for voluntary retirement. Okay. And received 7 lakhs. She got 5 lakhs as exemption under 1010C. Okay, and for balance 2 lakhs, she claimed relief under section 89. So can this be done? This was the question. Answer is it cannot be done. As we said, either you take relief fully or you take exemption fully. Partly relief, partly exemption, you cannot take. Okay, that is what is mentioned here. Okay, partly this, partly that is not available. Okay, so next is annuity. Okay, so annuity, if you see, this is also retirement benefit. Sorry, that was not the last. This is the last. Okay, so annuity, as the name suggests, annual, right? From annual, it's coming. So it is something which you are which you get annually. Okay, so for example, like pension, you get monthly, right? So this will normally you will get this as an annual amount. Okay, that is called an annuity. It's a yearly allowance. Okay, income, etc. Right. So this is the definition of annuity. Annuity means yearly allowance, income, grant of an annual sum, etc. for life or in perpetuity. Perpetuity means for life. Till the end you will get it. Now here what is important for us is only to know that annuity received from present employer, voluntary or contractual, is taxable as salary. Okay, voluntary or contractual means like whatever you're getting from your present employer, it is salary. From an ex-employer, it is taxed as profit in lieu of salary. right? It's just the name, as I've already told you, it doesn't make any difference in taxability. A person other than employer, like insurer and agent, then income from other sources. Okay, this is the taxability of annuity. Only this much you need to know. And next thing is salary received in lieu of notice period. See, in lieu of notice period means for notice period. In notice period, only thing is that you give a notice to your employer. Okay, you are saying that after, so from today onwards, after 2 months, I'll leave your organization. This is what you are saying. After 2 months or after 1 month, 3 months, whatever are the rules, you are just giving notice of that period. In the other 2 months, whatever you are earning, whatever salary, okay, all treatment is the same, because even in notice period you are working, you are still getting salary, correct? It's only salary, there is no difference in treatment for notice period. Okay, so in notice period also you will be getting various components, you will be getting allowances, you'll be getting this, whatever is the treatment for that, those treatments will apply. Okay, that's why salary in lieu of notice period is fully taxable. In other words, whatever is the component, okay, taxability, income tax, taxability will apply to it, right? If you have received something which is exempt, it will be exempt, right? So basically what we are trying to say is there is no difference between your normal salary and what you are getting during your notice period. Okay, just treat it same. ओके, राइट, ठीक है, तो कोई फर्क नहीं होता इसमें। हमने ये मेन पॉइंट है कि आपका नोटिस पीरियड का सैलरी और नॉर्मल सैलरी में कोई फर्क नहीं होता इनकम टैक्स पॉइंट ऑफ व्यू से, इट्स द सेम. Next is profits in lieu of salary. As I said, there is certain things just to make sure that they do not escape taxability, certain amounts. Okay, wherever certain things have been left open-ended, it is just closing the gap to say that this also is taxable as salary. वही मतलब है इसका, ठीक है, और कुछ नहीं. प्रॉफिट से कोई प्रॉफिट नहीं कमा रहा है पैसे, ओके, ये भी सैलरी ही है. प्रॉफिट इन lieu of salary means profit in addition of salary. So we'll see certain things and you will understand why I am saying to close the end. It is just there to close the loop, that any payment which the act basically has not expressly mentioned or something. So you have just defined profit in lieu of salaries, everything comes under the purview of taxability. So what are taxable as profit in lieu of salaries? Compensation due to received from employer or former employer. While termination of your employment, if you are getting compensation, okay, or modification of terms and conditions of employment. Okay, this would not have been separately mentioned anywhere. So because this is some different kind of amount, right? You're getting on termination of your employment or modification of terms, which is why it has been included as profit in lieu of salary, just to make sure. Okay, नहीं तो इसका कुछ रोल कुछ नहीं है. प्रॉफिट इन lieu of salary ये का कुछ स्पेशल ट्रीटमेंट होता है या कुछ भी नहीं है. Okay, there's no special treatment, same as salary. Okay, as your normal provisions of salary, it is the same as that. Certain things are defined as profit lieu of salary. Okay, so this is how, just for the ease of taxability, make sure that everything is covered. Say there are many things which you think, which are not sure are covered or not. Okay, these are many things. Okay, so these will be things you will see, like these all will be fringe kind of things. Okay, these are all, so you define as profit in lieu of salary and just say that this is chargeable as salary. That's all. You're getting the point. That is the logic here. That's all, nothing else. So one is compensation received from employer or former employer on termination or modification in terms of employment. Now this one, if you see, these are payments due from employer or former employer. See, all these are your exempted allowances which you have just studied. HRA will study. So, except, they are saying in the end, except. That means whatever is exempted, that is fine. But whatever is taxable out of this, okay, that will be taxable as profit in lieu of salary. Okay, to make sure that whatever is left out, it is not left out from taxation. इसलिए ये सारे चीजें देखिए, all these are, we have just seen most of these. Okay, then these are PF and all that. So whatever is exempt, whatever will be taxable from this, we are just calling it profit in lieu of salary. That's all it means. Okay. So these kind of things only you'll find in profit and lieu of salary. It will be something which will be covered under a major section. Whatever is left out, that will be included as that. Okay. And this is URPF, unrecognized provident fund. Next part is provident fund. We'll see that. Okay. Which does not consist of employee contribution or interests on such contributions. Okay. So this we'll see along with your PF section. Okay. Right. So this is also profit in lieu of salary. And then you have some received by employee under key man insurance policy, including bonus. This is also taxable as profit in lieu of salary. If you see, there are things, as I said, these are fringe things which are not included in any main section. So you are just making sure that it is all included under taxability. Okay. Then anytime sum received by employee under the key man insurance policy, including bonus. That explained to you key man insurance policy, I think earlier, correct, in basic concepts. Or so I'll just tell you what it is. See, and you have this key man insurance policy. 3 treatments are there. Okay, for key man insurance policy. Okay, so one is, see, here you have the employer. Here you have the employee, and here let me say is an agent of the employer. Okay, any agent. Now, so this key man insurance policy, first of all, what is it? It is LIC, life insurance policy. That's all. Right. But why is it taken? It is taken, name itself is key man. It is someone very important. For a key employee. There can be one employee, say he met with an accident or he is not able to work for 3 months. Then the employer might suffer a loss of 5 crores just because he is not able to work. He's so key. Getting the point? So, which is why the employer in such cases, he takes out an insurance policy, okay, on key man, right? So, as per as this policy, what happens is, so basically, say this, now he has taken this stating that if he is falling, if he is not able to work for these many months, whatever he'll define, okay, then I should get this much money. So he'll pay a premium, employer will pay a premium. If the event happens, okay, he is not able to work for 3 months, then whatever your employer is getting, okay, this will be taxable under profits and gains of business or profession, PGBP. For him, it's a business income, right? So if he is not able to work, that is business loss. So he is recovering business loss. Correct? So becomes business income. So this is taxable as PGBP. Okay, so this line is PGBP. Understood why? Now, under this policy, actually, many times what happens, they define some payment for your employee also. So sometimes, so out of 5 crores, let us say he is getting 4 crore 50 lakhs, okay, and the employee is getting 50 lakhs, something like that. Okay, so if the employee is getting something out of it, so why is he getting? Because he is the employee of his employer, correct? So that's why if he receives, then it is taxable as salaries. This is profit in lieu of salary, they are saying. Okay, this is profit in lieu of salary. Same thing if an agent receives. Sometimes you might have some key agent also, correct? But agent is not your employer. If in place of this employee, if the agent is receiving 50 lakhs, then that will be taxable as IOS, income from other sources. This is the taxability of key man insurance policy. Remember this, it will be helpful always for you. So the treatment will come in PGBP also, in income from other sources also, and in salaries definitely. We're seeing it now. Okay, understood? Okay, so this is profits in lieu of salary. So the amount due or received by employee in lump sum or otherwise prior to employment or after cessation of employment. Before employment or after employment, we are getting lump sum. See, all these are different kind of amounts if you notice, isn't it? So this is your profits in lieu of salary. Right? Next, we will talk about provident funds. Okay, so provident funds, you would all have heard about provident funds, correct? Or all salaried employees know about provident funds. So what is it? It's a saving device for salaried class. It's a retirement benefit. Some is deducted from salary as contribution, and employer also contributes same amount. Okay, and together it is invested in a fund called provident fund, right? So we all know what is provident fund, so I don't think any more explanation than this is required, right? ठीक है, तो प्रोविडेंट फंड्स कैसे काम करते हैं हमको मालूम है. एम्प्लॉयर एक अमाउंट कंट्रीब्यूट करेगा, एम्प्लॉय एक अमाउंट कंट्रीब्यूट करेगा. ओके, राइट. और ये दोनों इन्वेस्ट करते हैं, और जब रिटायर होता है एम्प्लॉय, उसको पूरा पैसा मिल जाता है उसका, राइट. So termination, he gets the whole money from accumulated fund. There are 4 components. Okay, right. One is your employer's contribution. Employer's contribution and employee's contribution are 2 main. Okay, and there will be interest on both because the fund is invested for years together, correct? There will be interest on both. So these are the 4 components. This is interest on employer's contribution, this is employee's contribution. There are 4 components of provident funds. Okay, so basically we have 4 main types of PF. Okay, first one is statutory provident fund set up under PF Act 1925. Okay, this is the oldest act for PF, and this is used by government, semi-government organizations, all government related, railways, local authorities, okay, recognized institutions, all these things, government related or government aided, all of them will use SPF, statutory provident fund. Okay, so exemption limit is the highest here. Next is RPF, which is under Employee Provident Fund and Miscellaneous Provisions Act 1952. So we have this act in your law course. Okay, so we'll be going through this act, right, in corporate laws. Okay, so this basically falls under your industrial laws section. Okay, now the PF Act, this act applies for establishment employing 20 or more persons. Okay, 20 or more persons, and but employing less than 20% can also join the scheme. So all this you will study in your PF Act. Okay, if employer and employee both agree, then even if there are less than 20%, you can join RPF. And if employer creates his own scheme, which is better than the existing scheme, okay, then he will get recognition from the Commissioner of Income Tax. If he gets recognition, then he can use his own scheme also. Okay, of PF. This is called as RPF. So most of us, we are covered under RPF. Okay, all of us working in private sector fall under RPF. Unrecognized Provident Fund or URPF is a PF scheme created by an employer. So here we said that he can create his own scheme, but he must get recognition from PF Commissioner, correct? So, but he has given for recognition, but he has not got recognition. That will be called as unrecognized Provident Fund. Okay, so unrecognized Provident Fund is very much like your recognized, but it has not yet got recognition of the Commissioner of Income Tax, right? PPF is a very good scheme. Fourth and last part is your Public Provident Fund. Okay, PPF, central government has established it for the benefit of public to mobilize personal savings. Okay, so anyone can open it, whether you're salaried or you are self-employed. Okay, you have your business, anyone can open it. So you have to open it in any branch of SBI, or there are certain number of nationalized banks, okay, where you can open it. Right? There are some designated banks which run PPF account. Okay, SBI and its subsidiaries and any specified bank. There are many other public banks also where you can deposit it, right? So salaried employee can become a member of both EPF and PPF, both. Okay, there is no restriction. Okay, that is for everyone basically. And how you can deposit? Multiple of 5. It should be minimum 500. Less than 500 a year you cannot open. Okay, maximum is 1,500, 1,50,000 per annum. Within this range you can open whatever. It will be in multiples of 5s. Okay, so you will deposit money, okay, every year, and they will pay it at the time of maturity, right? And whatever interest you are earning every year, that is exempt from tax. PPF is a very good scheme. So if we see now comparison from a tax perspective, see the relative comparison of your SPF, RPF, URPF, and PPF. URPF is unrecognized provident fund. Okay. So now SPF has is you can say the best of all. Okay. Literally nothing is taxable. So these are the things we saw, that there are 4 components of PF, correct? One is employer's contribution, second is employees contribution, then this is common interest on both. Okay, this is interest. And last point is lump sum, which you get at the end. What is the taxability of that? That we will see. When you are retiring, you're getting a lump sum amount, right? 5 lakhs or whatever, 10 lakhs. What is the taxability of that? That we will see in the last point. Okay, first 3 points is during contribution stage. Okay, so let's see SPF. See, employer's contribution is not taxable. Employee's contribution is eligible for deduction under section 80C. We will see that in deductions from gross total income. There is a section 80C in that. It's the very first section. Okay, so it is eligible for deduction under this. Okay, remember that your employee is contributing from his taxable salary here, basically. Yeah, okay. So when he gets deduction, okay, so that part of salary, you can say, becomes exempt for him. Okay, that is employee's contribution. Then interest is again not taxable, and your lump sum is also not taxable. Lump sum which you get is not taxable. There is an amendment in this. I'll tell you what that is. Okay, so this is not taxable. Lump sum on withdrawal, not taxable. Okay, one that is there. An amendment. I'll just come to it. Okay, so basically you can see in SPF nothing is taxable, and employees contribution you are getting a deduction. Okay, and then RPF, next is recognized provident fund. Okay, it's very close to SPF actually. Exempted up to 12% of salary. Salary is same as HRA. Okay, so 12%. So normally, employers do not contribute more than this. Okay, so as it is, like you can say, for most of the people, up to 12% of salary is like it is exempted only. Okay, it's normally not go more than 12% to many people. Okay, so then employees contribution, again 80C deduction is available. Interest exempted up to 9.5% per annum. This is very high interest. So normally your interest will be less than this. This is also technically as good as exempt. Okay. And excess interest then 9.5, it is taxable as salary. Okay. This is RPF. And then for lump sum withdrawal, okay, it is not taxable subject to some conditions. So I'll show you those conditions. These are the conditions. Okay. So very, very normal conditions which you all would be knowing also. The conditions are, it is not taxable amount withdrawn from RPF if employee retires or terminates jobs after 5 years of continuous service. 5 years service you have done, then it is not taxable. Second is, employee has resigned before completion of 5 years, but you have joined another organization and that employer maintains RPF and you have transferred your balance there. So it is fine. Okay. Third is, entire balance at the credit of employee is transferred to NPS. It is National Pension Scheme. Okay. So in this scheme, if you have transferred, then again it is lump sum is exempt. Okay. So 80CCD is this section. This also will see in deductions from gross total income in detail. Okay. So for this purpose, you only have to remember that if balance is transferred to NPS, then it is exempt. Then next point is, employee retires or terminates job before 5 years of continuous service. So in first point, what have we said? That he has to do 5 years of continuous service, correct? Or you resign before 5 years, but join another employment and transfer your PF there. These two conditions. Third condition is you retire before 5 years, okay? But the reason should be because of ill health you have retired, okay? Or by reason of contraction or discontinuance of employer's business, right? Because of discontinuance of employer's business, you had to retire, okay? Or third is any other reason beyond the control of the employee. In that case, even if it is below 5 years, okay, it is still not taxable. So these are the conditions which you have to fulfill. So in all, if you see, basically conditions is broadly 5 years of service you have to do, but you have got some exemptions also. Less than 5 years also you will get, it will not be taxable subject to some conditions. That is the thing which comes out of this, right? So if you are not able to fulfill this, say you are not able to fulfill these conditions, then amount withdrawn will be taxable as in case of URPF. Okay. Understood? Okay. So this is what is this note we talked about. Fine. Then, okay, this is the note. Now, what about URPF? See, in URPF, this is also not taxable. This is also not taxable. Okay. And this is, but this is not eligible for deduction under 80C. So your contribution also will be taxed. We are not getting deduction. That means your taxable income will be taxed, correct? So it will be taxed here. But employer's contribution and interest is not taxable at this stage. But at the end, when you withdraw the money, okay, then many things everything gets taxed. So we'll see this note 1. This lump sum withdrawal is this one. You can see this. Accumulated employer's contribution, fully taxable under salaries. Whatever employer's contribution is there in your lump sum you have got, it will be fully taxable as salaries. Employee's contribution will not be taxable because then itself you did not get deduction, right, under 80C. So it got taxed there itself. You will not tax it again, correct? So that's why it is not taxable. This is accumulated interest on employer's contribution, taxable as salaries. And interest on employees' contribution is always taxable as income from other sources. Okay. This is how it literally everything is taxed when you get lump sum amount from URPF. Okay. And then last, PPF. Okay. PPF is a very good scheme. Literally, you can say everything is exempt. Employer's contribution is not applicable because this is for self-employed people. Okay. Or even if a salaried person is opening PPF. Okay. He will not have employer cannot contribute in this. So it is not applicable. Okay. Then employee's contribution deduction under 80C he'll get. This is not taxable. The last one is also not taxable. Okay, PPF is also very, very good. Okay, now there's one amendment here of your PF. Okay, so this is that from your assessment year 2022-23, if employee contribution is above 2.5 lakhs, if your employee contribution is above 2.5 lakhs, interest on the part of contribution in excess of 2.5 lakhs is taxable. Okay, what they are saying is if your contribution is over 2.5 lakhs, so little higher placed employee only will be able to contribute more than 2.5 lakhs in PF, correct? So that's why they do not want to give tax benefit to people who are beyond a certain level. So which is why they are saying if the employee's contribution over 2.5 lakhs, then above 2.5 lakhs, whatever he has contributed, let us say he has contributed 3 lakhs. Okay, 3 lakhs means his 50,000 more he has put. That 50,000 will get accumulated till the end. Okay, whatever interest he's getting on that part, that will be taxable fee. Okay, understood. So above 50,000 to 2.5 lakhs, if the employee is contributing, it will the interest on that excess. Okay, for example, if I'm taking 3 lakhs here, so excess is how much over 2.5 lakhs? 50,000. On interest on that 50,000 will be taxable. Okay, so that will happen when you get lump sum withdrawal, right? So because this is all your amount is going, it is all going inside, and when you withdraw during that time it will get taxable. This will get taxed excess over 2.5 lakhs. Okay, so and this the same limit is 5 lakhs if there is no employer contribution. Reason being, when we are saying up to 2.5 lakhs, excess of 2.5 lakhs is taxable, you are saying, right? So if there is employer's contribution, employer will be contributing a similar amount. 2.5 plus 2.5 becomes 5 lakhs, correct? So basically till 5 lakhs, he is having the exemption, right? Total 5 lakhs, when 5 lakhs goes into your PF account, is having exemption. So that's why when there is no employer contribution, the rule is 5 lakhs. You have to see 5 lakhs. Here, if employer contribution is there, you have to see 2.5 lakhs. Your 2.5 lakhs is equal to 5 lakhs for them. In their account, 5 lakhs has gone already. Okay, 2 people have put. So that's why for them it will start at 5 lakhs. For where there is no employer contribution, it will start at 2.5 lakhs. Understood? This is your PF table, very, very important. Okay, go through this. And these are your notes for 1 and 2 we have already completed. And some additional small things, additional this thing. Okay, employer's contribution to NPS is fully taxable as salaries. So this we will see again later on when we do 80CCD. So this section will come with deductions from gross total income. So we'll examine the entire taxability of NPS in that. Okay, just remember employer's contribution is fully taxable as salaries. Okay, for now. Aggregate employer's contribution, aggregate contribution in RPF, NPS, and in any approved superannuation fund. RPF itself is an approved superannuation fund. Okay, if he is contributing to any other approved superannuation fund, okay, like for example PPF, okay, These are all approved superannuation funds. Okay. So in these three total aggregate employers contribution. Now here the PPF is also an approved fund, but for this case you will not take the example of PPF because employers contribution cannot go to PPF. Okay. So any of these three, total exemption is 7,50,000. Beyond that is taxable. Okay. Combined exemption limit is there. Excess is contribution. Okay. Taxable. Excess is taxable. Fine. And any annual accretion, okay, will be included in total income, interest, dividend, any annually, whatever is increasing, you're getting interest, dividend or something like that. Okay. That will be included in total income subject to your PF table. Okay. Subject to this table. Okay. These three things are there. And then we have one problem here. So I'll give you a 5 minutes break and then we'll come back into the problem. That's okay.
Okay, sir.
It's 9:37 now. Back at 9:42. Okay. Another 20 minutes max. Okay, so continuing. So I think hardly another 15 minutes or so. So now this problem, it says PF, okay, Mr. X has the following salary structure. You've got basic salary, okay, and you've got DA 1000 per month. This is fixed commission, okay. Be careful, it's fixed commission. So we will not use it. The meaning of salary for RPF purposes, HRA salary, correct? And entertainment allowance 2000 per month, okay. And these things are there. Next is X contributes 20,000 to Provident Fund. Okay. Contribution to Provident Fund is 20,000 and employer makes the same contribution. Right now we have to compute gross salary. If he is a government employee, PF is SPF, employee of Y Limited, and it is RPF or it is a URPF. Three things we have to tell. Okay. Now in the first case, if it is an SPF, okay. So we'll just put all three together now. Okay, in a table just. So basically, see in the problem, what you have to do is you have to compute gross salary here. Okay, you have asked us to compute gross salary. So we'll just put all salary things together. Just put the basic pay, which will be 10,000 into 12, 1,20,000. Okay, DA and entertainment allowance both will come under allowances, whatever is given. Okay, and we have we have to compute gross salary here. Okay, so which is why deduction will you need not worry about deductions. They have not asked you net salary, right? So even for entertainment allowance for government employee, you need not worry about giving deductions and all that, right? So we are only till gross salary here, right? After gross salary, there will be deductions and then net salary, correct? So they have asked us only gross salary. Okay, so let's just put this in. So here you have got case A, case B is RPF, and case C is URPF. Okay, so let us see. So first of all, your basic and that fixed commission, just put it in all cases. Same thing. And then in allowances, just put these two are in allowances. Okay. Only four things are given in the problem basically. Okay. And then next is your contribution to PF. Here it is 20, 20, 20. And we have to now compute the deduction. That is the problem. Okay. So in the first case, employer's contribution is exempted for SPF. Right? We had seen in the table that this is exempted. So this is exempted. Right? So this will become nil. And so your gross salary will be, just add these three and you will get your gross salary. The first case. Okay, now moving to the second case. Okay, in second case, you have to find out exempted amount. Okay, so how much is exempt? Up to 12% of salary. Correct? So I'll just show you the table once more so that. Okay, see here, this RPF is exempt up to 12% of salary, correct? Here it is. In SPF, it was not taxable. That's why we took whole thing as exempted. Okay. So, and here in RPF, it is exempted up to 12% of salary. Salary meaning is same as HRA. Right. And for URPF also, it is not taxable. So let's see. 12% of salary and this. Okay. So here is So this is your going to be your HRA salary, correct? So take the basic salary, which is 10,000 to 12, 1,20,000. Commission is fixed, so you cannot take it, correct? Should be a fixed percentage of turnover achieved by the employee. And DA. The basic DA and commission. Okay. In DA, how much is forming part of salary? It's not given. Take the whole thing, right? So this gives you your salary 1,32,000. Okay. And now compute 12% of 1,32,000. Okay. So 12%, if you calculate 12% of 1,32,000, you will get this 15,840. Okay. This is how you got 15,840. 12% of 1,32,000. Clear? Right. Now, if you do this minus this, you will get the taxable amount outside. Just add everything, all these things, you will get this. And your URPF here is same as your SPF. Okay. Because this is only contribution stage, and in this problem, we are only examining employer's contribution. Okay. Which is why here also it is same as that, because employer's contribution is exempt in this also. Okay, so everything is same. This is your employer's contribution, which is exempt fully here also. Okay, these are the three things. With the table. See, this is your case 3, URPF, correct? So employer's contribution less exempted is these two. It's fully exempted. Fully exempted here also. And here over 12% of salary was taxable. That we found out. For finding out over 12% of salary, we had to compute salary. And so we computed, we took the figures from the problem. What we did is basically took these figures from the problem. Basic pay 1,20,000, 10,000 into 12, DA was 12,000, and this commission anyway we will not take, so it was 0. Just added these two, we got the salary. Okay, so just go home and practice it once, so then you'll be comfortable. Okay, so last is something called transferred balance. What happens is sometimes URPF it gets recognition from the Commissioner of Income Tax. Okay, if it gets recognition of income tax, then you should know how to treat the accumulated balance, because it is coming from URPF to RPF, right? So what to do of accumulated balance? Tax treatment is like this. You have to consider the whole thing as RPF. Okay, so consider the whole thing as RPF. Based on RPF, okay, whatever is taxable till the date when it is getting transferred, whatever is taxable as per RPF rules, that will be taxed. Okay. That will be taxed in the year in which they are getting the recognition from Commissioner of Income Tax. Okay, so we'll see one problem for this as well. And here, because you know, for PF you have to calculate every year, right? It's kind of a yearly calculation. Sometimes where there is serious accounting difficulty, Commissioner has the power to do a summary calculation. If he feels that summary calculation will be close to that only, okay, what if you start doing year by year, because there are so many employees, right? Everyone has a PF account, so they can do a summary calculation. The difference is not too much. Deemed to be income in the previous year in which recognition of the fund takes effect. Okay, the year in which the recognition happens, all the previous amounts will be taxable on that year. In that year, relief is not available here. Okay, relief is not available at all. So now I give you an option whether you want me to come. This illustration 33 is there, and then we'll move to allowances. Okay, If we complete this illustration, we'll hardly take 5 minutes, 6 minutes for this. We complete this, then next time onward we can start allowances. Okay. So let's just finish this off. Fine. So here, what they're saying is Mr. Sharma has been appointed as accountant of ABC Limited. Okay, on 1/4/2019, and working with the same company is then. Salary structure is like this. So you have got this increment table. Okay. So they have given two tables. One is basic salary table. One is DA table. Okay. Fine. So he and his employer contribute to URPF, 14% of basic and DA. Okay. So, and here they have not given any commission. So your salary will be basic plus DA only. Okay. Every year 9% interest is credited to such fund. How much interest? 9% interest. Okay. So as on 1/4/2021, the first day of your previous year, 1/4/2021, fund gets recognition. Okay, the fund gets recognition. Hence, the accumulated balance in URPF is transferred to RPF. Show the tax treatment. Okay. So here now what you have to see is on this date. But first go to this date. Okay, on this date, whatever amounts are taxable previously, that will be taxed in your previous year 21-22. That is your AY 22-23. Okay. So if you start with, you can see that 2019 his employment is starting, correct? The first will be what? 2019-20 previous year. Then will be 2020-21. Okay. And after 2021, we will come into 1st April 2021, correct here. So that is these 2 years is what we have to compute basically. Okay, so on the first year, his basic salary was how much? 5,000. He joined with that, right? He joined on 1/4/2019. And his DA was 3,000, correct? So his DA is 3,000. Okay. Basic salary, and this is DA. Okay. So this is going to be how much? Total of 8,000, correct? Total is 8,000. Okay, it's a total of 8,000. Now, next year, what will happen? You see this line. See this and this for DA. Okay. Here, so first year he started with 5,000. Next year, he'll get an increment of 1,000 here, correct? And an increment of 500 here. So this will become 6,000. This will become 3,500. Correct? This will become 6,000 and this will become 3,500. Let's do one thing. Let's just move this little ahead. Okay. So this has become 6,000. This has become 3,500. Let's put the total here. Okay. Right. So this will become your salary. Okay. This will become your salary. So yeah, fine. So now let's find out the let's find out how much will be taxable in the previous year 2021-22. Right. So now in the first case, okay, so annually it's going to be 2019-20, what was the employer's contribution? 14% of 60,000 plus 36,000 DA. Okay, 60 plus 36 is 96,000. So this is what we had calculated here, correct? If you, this is monthly, annual, 12 8s are 96, correct? 96,000. This will be, okay, 1,14,000. Correct. So this is how you take 14, employer's contribution is 14% of 96,000, which is 13,440. Okay, and here exempted amount. Now you have to consider that it is RPF right from the beginning, we said, right? So what will be the exempted amount of RPF? 12% of 96,000. So this amount, taxable amount is this minus this, is equals to this is the taxable amount. Go to the next year, 14% of this is 1,14,000, which we calculated. It becomes this. 12% of 14,000 is this same thing. 15,960 minus 13,680 gives you this. Add these two will be the taxable amount, okay, which will go into which will be taxable as on 1/4/2021, basically for previous year 21-22. now to this you have to add taxability of 21-22. 21-22's amount also will come, right? So apart from 4,200, what you have to say, see the current year onwards it has become RPF, so it will be treated as RPF straight away. Taxable amount will be like this. You can directly find out. This will be 84,000 plus 48,000. How? Increment of 1,000. Okay, give increment of 1,000 again, so this becomes 7,000. Okay, so 7,000 means 12 sevens are 84. Similarly, here also you give another 500 increase for DA, so you will get 48,000 here. Okay, add these two, you will get 1,32,000. Now this 1,32,000, 12% is exempt. So 14 minus 12, if you do, you will directly get the taxable amount, which is 2,460 here. Okay, so total taxable amount is 4,200 plus 2,640. Okay, this will be your total taxable amount. Okay, for this year, as far as this is concerned, your PF is concerned. Okay, and then interest, as far as interest is concerned, interest rate is 9%, and you know in RPF 9.5% is it is not taxable. So interest is not taxable. You don't have to compute interest at all. Okay, so this is what it is. You have any question, then you can ask me, or you can go through at home and you can ask me later also. That's fine. Okay, so next is we are going to we'll start with allowances in the next session, which will be on Friday. Okay, on Friday we'll continue with allowances. If you have any question, you can ask me now, or we'll call it a day.
Okay, sir. No questions, sir.
Okay then. Thank you. See you all later.